Headlines say comments by one of President Trump's top advisors, Peter Navarro, on trade talks, what's really causing this sell-off at this moment. But you got to say there's so many other factors out there, including those that never make the news. And only later do we learn that they were like black swans. Are we missing something with this market that's much more dangerous than the headline writers could ever catch? Let's ask. We brought the best on this rough day. Jeff Sott, Raymond James Chief Investment Strategist. Kim Mahoney, Mahoney Asset Management's president. Scott Martin's with us. Kingsview Asset Management Chief Investment Officer. He's also a Fox Business contributor. Jeff, let me start with you. I don't want to talk about Fed. I don't want to talk about China for a moment. What else could there be possibly? It feels like, as someone who's been watching the markets a long time, I've been watching for like 30 years. Later, we find out something was wrong that we didn't catch. Could there be something else to this market? Yeah,
there sure could be. You could see something out of the Mueller investigation, which would be very critical of the Trump administration.
That's a great point. And we're getting some news today. And, of course, that seems like it's going to wrap up real soon. Lots of speculation there. We know constitutional crisis headlines have sent this market down before throughout the year. What do you think, Ken?
I don't know. I feel like we're in this kind of Bill Murray, Groundhog Day loop over and over again, right? We wake up to futures up 100 points by midday.
Yeah, but I haven't learned how to play the piano. I mean, at least he got some benefits out of it.
I know, but look, we're all trying to figure out what earnings can be next year, and it's just kind of this kind of back and fill, bouncing around. I hope it's not a black swan. I hope this is the normal kind of overreaction, looking down the road and say, hey, you know what? Earnings are going to come in a little bit lighter than we expected, and that's kind of what we're dealing with. Again, I hope it's not a black swan, because if it's not a black swan, we could rally from this point here.
Scott, of course, there is a feeling that the market is adjusting to slower earnings growth, is adjusting to a slower economy. But, that's not necessarily news, right? I mean, we've known this for a while now. Certainly we knew we couldn't grow at 25% earnings every quarter. The last 3 or 4 quarters have been remarkable. So do you sense there could be more?
I don't, Charles, and that's really the tough thing. You're right about the layout there. I mean, the market is kind of factored in, and that's what the beauty is of this bearishness, is the market's factored in, not Armageddon, but really bad things, aside from maybe the Mueller report, which Jeff mentioned, which could obviously be a swan that swims up at some point, but probably swims away, too. I mean, here's the thing. If you look at valuations, Charles, the market, depending on your estimates, for 2019 is trading at what? 14.5 times earnings, maybe 15 on the high side? That's about where it should be. So to me, this is fair value, and the market is already anticipating more bad things to come. And to Ken's point, not only liking the Groundhog Day reference, because God knows with the markets like this, I've started taking on Bill Murray's diet from that movie to deal with some of the market pain. God knows that this is about time when the market may get some good news and may have a time to go up here because of the fact that so much bearishness is abound.
Jeff, though, the market being cheap, I mean, yeah, it's cheap, but it doesn't mean it can't get cheaper, right? I mean, I thought IBM was the cheapest stock in the market, and they got a 38th downgrade today, and it's even cheaper now. So the notion that it's cheap doesn't mean that this is going to necessarily turn on a dime.
Well, in the long run, it's all about earnings, Charles. But in the short and intermediate term, the stock market is fear, hope, and greed, only loosely connected to the business cycle, because investors tend not to manage risk. I've been on your show. I didn't see this coming. It was a surprise. Why they arrested this woman on December 1st and we didn't hear about it till December 5th? That's a surprise. Of course, somebody knew it on Tuesday.
Right.
That's what the selling was about.
Right,
that. And
exactly.
This is
it's impossible for people to say no one knew. Someone knew Sunday. I mean, and let's face it too. Though we had good commentary coming from China since the arrest, and which makes it even a little bit more baffling. On that note, the tweet on Tuesday.
Yes.
From a business point of view, from a stock market point of view, probably the most damaging tweet so far. What do you think,
you mean
Jeff?
the tariff king?
Yeah.
Yeah, well, I think so. Look, we're playing good cop, bad cop constantly here. Even Navarro, like this morning we heard from Kudlow, kind of give the good cop. Hey, we're working with them. We think we can do some type of deal with them. And Navarro comes out and says the same thing over and over again. If we don't get a deal with them.
Why does Navarro's comments send the market down 500, but Kudlow's comments doesn't really move the needle?
Yeah, look, you have algorithms tied to headlines now. You have these kind of algorithms cascading the markets. There's a lot of fear out there. There really is. I mean, it seems like, we've been down to this 2,600 level with the S&P, 6 times I count, and we bounce a little bit, and that's kind of where this trading range is. So it seems like, nervous Nellies have their hands on the trigger.
Let me ask you about that, Scott. We are range-bound, and we're violently trading in that range. So for the S&P on the upside, it looks like that 28.15 2641 on a closing basis. For the Dow, 26,191. These numbers have held. Yesterday they held. We were down 800 points. It held, and we came roaring back. What happens if we break through either the downside on these numbers or the upside?
The computers are going to go nuts, Charles, like they kind of have in the overnight markets and the future side, you know, because they're going to see levels broken, and that's when they're going to really start slapping the ping pong ball back and forth to each other. But I like what Jeff and Ken have put forth about market psychology, Charles, because you know as well as I do, and the guys do too, there's times when the market, frankly, is off its medication. I know I've been saying that more and more lately, but there's times the market is just not rational. And so we're just getting back, though, really the volatility that we deserve to have but didn't get in 2017. So to me, once this passes, to your point, where there are some levels to defend, I agree. Once we get back to the market, maybe operating a little bit more normally, trusting some of the data like this morning. I mean, goodness, today's payroll number was a three-wood right down the middle of the fairway on the par 5. I mean, there was nothing wrong with today's number, and it rallied for about an hour and then totally smoked off. So to me, there's a reason why this market is not acting well, and that is time, and time needs to pass before it will.
Jeff, you were optimistic to your point. You admit that maybe you were too optimistic. So how do you reassess this? Where do you think we are now?
Well, you manage risk. You know, we cut back on trading positions. We trimmed some long positions. We raised some cash. When you make calls in this business, you're going to be wrong. And the real secret for the successful investor is to be wrong quickly for a de minimis loss of capital. It's not like the Darden School at UVA. You're not going to get a 4.0 in this business. So, you know, you have to play the cards that they give you, and this is what the market's given us right now.
A week ago, I was at my subscribers were at 15% cash. We're at 30% cash now. Yeah. So to your point,
well, we can get some of your cash back on the sideline, off the sidelines again.
Yeah,
but it is sentiment change, because really this morning it really was a three-wood shot right down the middle.
It was Goldilocks.
Not too hot, not too cold. You know, we had some hot numbers in there. And of course, Powell spoke about that. You know, back on October 3rd. I think it's sentiment, and I think it just takes time. We have to start building some higher lows here. What we do is kind of zing-zong, bounce back and forth.
But how does that happen? That's the question. Do you know what can do that?
China deal some type of, you know,
earnings season is done.
Look, I don't think we're going to get the whole deal with China, but even getting partial fills, so to speak, with the China deal.
So potentially we could be going through this for another 90 days or more, 120 days until we get resolution. And what about if we get news coming out on it? Because I thought the news, for the most part, with the arrest aside, has been pretty good from both sides. You know, I go and I read the South China Morning Post and I read the China Daily and I go to the website of the China Commerce Ministry. They're saying good things. They're saying better things than the Washington Post is, right?
They're using the word immediately a lot, and that's a pretty strong word, immediately, for China, who look at things in 10 and decade cycles. I mean, they're looking at things immediately, so you're right to that point.
And that's why, guys, it's gnawing at me. It's gnawing at me that maybe there's just something we are missing completely. Hey, let me ask you about leadership here, Scott. No, the market relied on the momentum names. Yesterday, that reversal was all the momentum names, particularly non-tech. Amazon, Netflix, you know, just phenomenal moves to the upside. Alphabet. What happens without leadership from momentum names? Can we rally?
Well, yeah, we can. It's just you need some new leadership, and you need it to hold. I mean, we've had some
where are we
here
going
and
to get
there.
it from? Financials.
Well, here's
Goldman
the thing.
Sachs is getting crushed. What happened to the smartest guys in the room?
Financials, hey, Charles, financials have not led this market for years, and the fact that everybody's been calling for them to is probably why they haven't. But I'll tell you, two areas that we've owned that we do like here based on valuation alone is industrials and, frankly, on momentum, healthcare. Now, do those lead a traditional market? No, they typically don't. But tech eventually will bottom out and come back. But you're right. It needs to be probably new leadership. I mean, this could be, as the guys have pointed out, a new type of market where, you know, look at the spread between value and growth over the last several months and even last several years. It's been so wide that there has to be some catch up from value. I'd look at value stocks here, too.
On that note, today, right now, before I came down, healthcare was among the biggest losers, right? So, you know, we're in one of these situations now where even the big winners are starting to be sold off. Maybe margin calls, maybe ETF, whatever it is, though, Jeff. It's hard to find a safe haven in this environment.
Yeah, people are taking profits in the things they have profits in. The other thing is the hedge funds gave the window for their investors on November 15th, and the hedge funds are getting liquidated, and that could be pile-on selling from that sector.
I'm going to ask both of you guys a question I posed yesterday with respect to algorithms, maybe bringing back the uptick rule and other things to defend these massive waves to the downside. Are you okay with something like that? Do you think we should make adjustments or let the markets be the way they are right now?
I think the two dumbest things they did was go to the decimal system. If you still had 16ths, 8ths, and quarters, you would not have flash traders. And to eliminate the uptick rule was completely insane.
Quick.
Yeah, I agree. Also, uptick rule definitely on that piece as well. Yeah,
Thank you all very much. Hey, I couldn't